soon as we break out of that, and it doesn't need to be 15 minutes, okay? It doesn't need to be 30 minutes. It just means that once we have the opening price, if we have a partial fill, which is what we have here, it's almost like a 3/4 of a closure on it, then it rips lower. You have to anticipate it reaching for deeper discounts and simply going to regular trading hours. In the old regular trading hours price action, don't just simply look at electronic trading hours. Look at regular trading hours and see what they're going to reference, because and there's your trading into that. Okay, so this is your first skill set. You have to know these types of things. Where is it going to draw to? Why should it draw? Knowing what it's reaching for. They're the beginning basis points of how you're going to find trade setups. If you can't pick the right direction, if you can't do that, you have no chance. You have zero chance. I promise you. Most live streamers out there probably are like sitting on their hands thinking, I wonder what it's going to do. They have no idea where it's going to reach to. They're just waiting for something like a billboard sign to pop up and say, okay, well, I'm gonna chase this or chase that. You have to know what you're looking for. If it goes right through here on the downside and just keeps on running, I would have no interest in having this at all for the session in the morning. And I would just simply move to wait until the afternoon, get through lunch, and come around 1:30, sit down and watch the price action and see if there's anything smooth that needs to run after. Where's the sell side or buy side they left intact? And I would use that for the PM session. Looking at the initial run here, 9:30, 9:31 candle, bumps the high there, just enough to clear these little tweezer highs. Isn't that pretty? Right there, clips it, rejects it, comes back to the opening price here. We open, trade up to it there, sell off, then reach for the PD raise outline. But now this is really heavy. Let's go to regular trading hours again. And right below here is the liquidity for anyone that was long. That's what they're going to target. They're going to target that right there. Very, very, very complicated market environments for a brand new startup student. Anyone tells you it's easy as a brand new student right now in any discipline, they're liars. The this range here on the upside, buy side of balance, sell side efficiency, we traded down to it and through it. So if they want this low, I would like to see them respect the upper half of this. Don't come back up into it with any bodies. It can come back to the halfway point and wick into it. I'd prefer it not to do that. But keeping its bodies in the lower half or under it is even all the better. And that's supportive of a run into that liquidity. If it can run up and start laying bodies down in the upper half of that blue box, that makes it far less likely that they're going to reach for that liquidity before a deeper retracement. So in essence, what I'm teaching you is how to anticipate inversion fair value gap and how to categorize and classify when they should be implemented, when they shouldn't be implemented, what are problems that arise when you anticipate them behaving as such, what would negate it? What are you looking for to support the idea? I had a guy ask me in email, do I think that the market's going to stay ugly all year? And no. Remember, this is the reason why I sit on the sidelines for the first month of January. Like, I generally am not participating in the first month of the year. I'll work with my kids, you know, close friend of mine or brother-in-law, I'll sit down with them over price action like that. But I'm not actively trying to get in here and try to whip up on anybody. It's just I'm waiting for the first week to get through in February, and it's usually the first Tuesday of every February. That's when I go in there. Now, why that? It's just something I've always done. It's just I set myself a parameter. Said, okay, I'm not going to start on a Monday. I'm going to start on a Tuesday, and it's going to be in February. So that's what I've always been doing. It allows that first month because there's so many people, they're eager to get out here and try to make a lot of money. So they're willing to put down some heavy bets, like heavy-handed bets, and they get sitting over the holidays and they think to themselves, "Yeah, I really think the market's going to do this or that." So they form this opinion, this sentiment really builds up. And market makers know this. They know there's a huge shift in market sentiment and big bets are going to be placed because you're starting the brand new year off. Everybody has a lot of energy, the most energy in the beginning of the year, especially if you're impatient, you're greedy. You're going to do what? You're going to go out there and just start plunking down trades and put down big risk. And that equates to what you see here on the regular. Now, in the last couple of years, we've had some pretty good Januaries where the market delivery has been pretty handsome, actually. But this year, we've seen why I have done this for 3 decades. It's just something that I don't want to be a heavy-handed participant in during the first month of the year. I'm not worried about giving up what goes on in January. I've never looked at a January that moved so well, so big, and said, "I'm changing what I do every year because it moved really good this year." I don't. I see it fail to deliver on a very good or efficient means on the regular than it does sporadically a good January. In other words, it's more likely to deliver what you're seeing this year: sloppy, choppy, indecisive, weird, wild opening range gaps where you open way far away from previous day's settlement, which causes, wonderful volatility. But when you add to it the geopolitical things that's going on around the world, it just makes it a lot more complex. Excuse me, a lot more complex for very short term, higher time frame. I'm sorry, lower time frame precision. It spends a lot of time back and forth over previous candles. And I don't like that. I like to have low resistance liquidity runs where it leaves things. There's your liquidity. Okay. Where it leaves pools of inefficiency here. That's the type of price action I'm looking for when I'm trading. So if the market is not it's not leaving a porous wake behind it when it's running up or down. That means leaving inefficiencies like this. Chances are I'm not betting my heaviest hand, that's for certain. But if we're spending a lot of time back and forth over top of previous candles, that's what I refer to as fuzzy. It's like fuzzy. It's sharing the same space with previous ranges. So to me, I don't want that. That's not algorithmic. That is intervention. That is them working previous ranges, constantly going after orders because they're greedy. They're trying to knock everybody out. And when they're knocking these individuals out, they're accumulating that. And because of the uncertainty around the world, we're going to bomb this one. We're not going to bomb that one. We're going to invade this person's country. We're going to take that person's country. We're going to take their resources and sell it for personal profit in a bank account they have and call it legal. There's so much nonsense is going on right now. Like it's bewildering. So I just think that if any time in history that you wanted to have a very simple approach to trading, it needs to be right now because making it complex or complicated is the worst thing you can do. You just need to know where's it going to go next. Okay. If you don't know where that is, well, you're in trouble. So I think that's about it for today. I think I covered a really good sound approach that's where you start, what you're looking for, how to transition from regular trading hours and electronic trading hours, what information you're trying to derive from that, developing the range, um, determining what that range is going to be in pre-session and how it's used, and then using the opening range when we get it at 9:30. We immediately went outside of it here after almost a three quarters of a run to it, then used the opening price, which is very sensitive. just like the midnight Eastern time opening price. That is many times like a magnet. It's very sensitive. It also helps with the daily directional bias. Here we have the open. It trades up. There's your Judas. It breaks down, hits it there, and then breaks lower. Your first presented fair value gap would be here. Yes, there's a small little gap there. I would not use that because we had this box here I highlighted. It displaced into that there. So this candlestick's low, this candlestick's high. Let me show it to you like this. Let's go Purple Rain today. That's such a good song, man. Don't you miss Prince? That man was a genius. 11 instruments, musician, singer. What can you say bad about the guy? Except that he ain't here anymore. So there's my election for first presented fair value gap, and it's because I told you the inefficiency from regular trading hours. It displaced into that, and this would be just viewed as a regular old breakaway common gap. That's why I wouldn't use it, and it doesn't have that much of a range versus this one. Okay, so I taught you a whole bunch of stuff today. Told you where the market was going to go before it did it, why it would do it, and how it was going to handle it. And then there you go. There's your chart. There's your delivery. First step is this. If you can't see where it's going, why it's going there, you can't do entries. You can't place stops. You can't profit. You can't keep an account. You become insolvent. That means you blow the account. That means you have to reset or stay in demo in misery and just complain on the internet about everybody doesn't make money. It's all fake because you can't do it. Okay, so there's a right way of doing it and there's a wrong way of doing it. And this is my answer to the people that have been leaving comments in my emails. And some of them have been very clever about what they title they title their emails to get my attention. But this is what you start with. Okay. You start with this. And in the beginning, you'll still feel like you're lost, but show up every day, go through the charts, do the same thing every day, every single day, the same thing every single day. And then over time, how much time? I don't know. It's how much time are you placing in the study of it? Because if you're only in here trying to do it for a couple minutes a day and you think it should be just like that, you're not teachable. You're not being realistic. And I can tell you that if I did one-on-one, which I would never do again, ever, 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 ever. The level of entitlement in today's world is crazy. But back then, when people were better, sober-minded individuals and decent folks, they would stay with me for a week, and I would work with them. And sometimes they would come off with a little aggression in the beginning, like, "Do you think I can make this much money by next week?" I'm like, "No," and they'd be like, "Well, one guy literally come out and said, "Well, if you came out with that and you told me right away, I don't think I want to do this now." I said, "That's great that you think that. That's actually a good thing." And we parted ways, and that's the way it was. He later came back because he tried to do other stuff, but he admitted that he wasn't ready, and he was being impatient. He thought he knew everything, and I told him, I said, "It was good that you did that because you became teachable." Much like that Jade Master parable where the guy comes up and keeps interrupting the teacher. The teacher knows what you're supposed to learn, but you can't appreciate the lesson until you feel it. And that's what this is. You got to be in here watching the candlesticks form, where they're going to reach for. Now, you're going to do it. You're going to pick the wrong inefficiencies. You're going to pick the wrong high and low. It's not going to do what you think it's going to do, and you're going to get frustrated in the beginning. That's okay. That's part of it. That's normal. You're not going to come out here on a live stream and say, this is what it's going to do, and it does it. Okay? And not in the beginning, you won't be able to do that. But in the beginning, you want to submit yourself to the process that, it's normal for you not to know what you're doing, but you're going to discover things that repeat over and over and over again. And you have to give yourself the time, give yourself the permission, allow yourself to discover what it is that you don't know. You'll hear my words in lectures that you swore I did not say when I said them. I don't edit those videos, they're up there. Some of them are almost a decade old now. In August, they will be. Think about that. Mentorship, 2016. In August, I started that. And all those lectures were being recorded that summer. All those things that people listen to, I get emails all the time. Every month I get emails. I swore I thought I did a good job of taking notes, and I listened to this video, and it's something I thought I discovered on my own. I was like, I want to come back and talk to you, Michael. This is about, and I heard it. You said it, and it's like I don't remember you saying that. It's like you put it in there after the fact, like you edited it. Right? These lectures are very, very, very dense. I'm compressing 30 years into hours. And you can't appreciate those lessons until you go through the process of listening to what I teach. Go through that process of saying, I'm not interested in making money right now. Because once I learn the skill set, I can make as much money as I want. That's the sober mentality. That's a mature aptitude about what it is you're trying to take on as an endeavor. You're not trying to make money real quick and then quit. You're trying to have a skill set that feeds you and your family and changes the landscape of your family tree. You want to be able to teach this to your children. You want to be able to teach it to their children if you're fortunate enough to live long enough. But you can't get there unless you submit yourself to a process. And the process is don't try to pick entries yet. Just try to pick the direction. Where is it drawing to? And then once you have that, then you can go back through in hindsight and say, what do I see in here that makes sense? Do you see a fair value gap? Do you see them running back to a breaker before it runs? Do you see a silver bullet? Do you see the market maker models in price action? In the beginning, you won't because you just started looking at it. Are you going to give yourself a fair chance? Because if you're not, you can't blame me. You can't blame the other people out there. I'm not scamming you. They're not lying for me. I'm not selling anything. I'm teaching everything on this YouTube channel and telling you not to buy my books because it's already here. It's already on this YouTube channel. Don't buy my books. Find one author that tells you to do that. There ain't one. I don't know what else to tell you. I mean, either you're going to listen or you're not going to listen. But if you don't know how to see where the price is going to go, you have no chance in any discipline of trading. Zero. Absolutely zero. Now, if you are a student of another discipline and you start implementing these types of things I'm teaching, they're very simplistic things. They're elementary in the beginning, but they don't feel elementary because you equate the outcome of being right or wrong about what you think is going to happen in price. And then you vilify yourself, you ridicule yourself, you beat yourself up and say, I don't know how to do this. I'm probably wasting my time. If you're thinking that, your subconscious is remembering it. And it's feeling the symptoms of what you're doing to yourself. You're beating yourself up with negative self-talk. Whether you vocalize it from your mouth or you're just thinking it, you're feeling it as you tell yourself. Imagine if your mother and father got in your face and said, you are a worthless piece of shit. You never do anything right. But later in the day, after you do a good chore, they say, all right, good boy. I love you, son. I love you, daughter. Are you going to feel warm and fuzzy with that? No. Your subconscious is going to say, don't trust that. Because remember what he said to you earlier? We hold on to negative. That's why horror movies are the one of the highest genre watched, the biggest box office. Horror, horror, horror. There's more horror movies produced over the course of a year than any other genre. Why? Because the human psyche, we cling to negativity. Look at what's spewed out on social media every day by everybody. And the average person has over 300 negative thoughts enter their mind. That's the average. If you're chronic about it, it's probably double. So if you're whipping yourself up in the beginning because you think you should do it quicker, learn it faster, I'm telling you, I'm probably the oldest guy out here that's gone through all of the terrible things in the beginning. I tried to do the self teaching. I tried to do all that stuff. I tried everybody else's stuff. Okay. And I promise you, there was no troll out there ever and never will be that's ever been harder on me than I was on myself. And I still carry the scar tissue. I did it to myself. And I can tell you, when you do it for a length of time, it's hard to get rid of it. So you don't want to begin with that. Find a positive. Say, I I didn't do too many things wrong today, and I learned something from this experience. That's how you would say it. If you didn't do it right, if it didn't come to an outcome that you expected, or it just simply did everything contrary to what you expected, find a way to tell yourself internally and vocally, and then record it in your journal that it was a positive expectation because, or not expectation, but experience, even though it didn't meet your expectation. Find a way to talk positive about it because you will tear your shit up from Jump Street. You will do it wrong if you do anything negative. If you do it negative wise in the beginning, fill yourself up with negative, toxic thinking, you literally are giving yourself no chance in the beginning, but you're feeding your mind toxicity. And you'll be fearful of putting up any real effort after that because why should you bother? And by default, what will happen is your subconscious will demand that it becomes easier or you disconnect and you stop doing it. You don't hear Mark Douglas talk like that. No other person with a psychological book in trading teaches you that. But this is coming from someone that's lost fortunes trying to do something that had no outcome at all, doing toxic thinking along the process. The first thing you have to fix is how you think. How you think changes everything. And if you think that you know everything, if you think you know how you're going to be taught, you're going to fail. I promise you, there has never been a trader that came up and said, this is how I should be taught. And I'm going to learn it this way, that way, this way, that way. And that's it. No, they had to submit to a process. They had to give up their expectations. They had to suppress their desires, their immediate gratification. They had to defer all that. And they had to change the way they think. That means they had to adopt patience. And by not having the concern of being right or wrong in the beginning, it frees you up to discover, wow, I am learning. It doesn't feel like it the first few times you sit down and you start doing these things. Just watching price action. What's the benefit of that? Really? Look at anything. When you watch doctors, you go to medical school, you're watching real doctors do it before they put a scalpel in your hand. Would you leave your toy alone? I'm on here live streaming. Nobody wants to hear your piggy. Not now. Scott, Scott ran up on me with her little, uh, it's a blue rubber pig. You squeeze it, it oinks. She runs up against me and then presses against my leg like, okay, it's time to play, Dad. You've been on here too long. When Bailey was here, as soon as I would start talking in the microphone, she would just get up and walk into the bedroom. She would give me, privacy. These little ones, they're impatient. They're like what I'm describing to you, not to be like, don't be impatient. Give yourself time. But anyway, I told you I'd hang out till 10 o'clock. It is what it is. What I've shared today. If I would have had this given to me when I first started, it would have saved me a lot of heartache. It would have gave me direction. It would have gave me a procedure to do every single day. Go through the motions of determining where it's going to reach for, and then after the day completes or the session completes. Okay, what do I mean by that? Around noon, go back and look at the morning session from 7 o'clock in the morning to 9:30, and from 9:30 to noon and go back through and see how the market reached for inefficiency, how it reached for liquidity, how it expanded in its daily range. What side of the marketplace was it working towards most? How fast was it easily giving up the desire to go higher or lower? Like all these things, you need to log that stuff. And then because you're doing it every day, you're implementing a process that you don't see the benefit of in the beginning. But time doing it will yield the experience that you don't appreciate by me saying, this is how you get here. How do you know where it's going to go there next? How do you know? How did you know that? Because I submitted myself to these things. And it wasn't fun in the beginning. It was very, very boring. It was no promise of anything of usefulness at the end of it. I just submitted myself to I'm gonna study what price does and what it's looking to do and how it does it and what does it behave like and how does it look when it does it. And then I noticed that there was repeating things. And look here and look here. And that's how it happened. And maybe he'll do the same thing for you. I believe he can do it. Do you believe it? But if you're not going to make an attempt to try to do it at all, why should he? So, with that, I'm going to wish you all a very pleasant day. I'm sure I didn't tickle the fancy of most of you, but um, for the groups that are brand new, looking for what you're supposed to do in the beginning, it's all you're doing is trying to get a feel for where it's reaching for. That's the first lesson I ever taught, and that's what you're doing now. The draw on liquidity, where should it reach? And then you fill in the gaps. Go back and look at how the PD arrays formed. And then the ones that jump off the chart at you in hindsight study, not live. Some of you want the silver bullet to appear and be able to spot it right away because you understand the idea, but you don't know how to implement it real time. And you're getting frustrated because you can't enter a trade based on it. And you equate that as it doesn't work or you can't ever do it. And you're just simply jumping ahead of several steps. You can't do that. Okay. Just because you signed up for medical school and you have your own scalpel, they don't say, oh, look at this. Hey, Todd, we're glad you came today. You got your scalpel on you? Yeah, grab it. Reach in your backpack right now. Grab that. Come up here and cut this guy's ass up. Because look, he needs to have something removed, and it's a growth. So we're going to give you a crash course. Get out here and do your best job. Just do it. How you feel about that? You feel confident today? Come on, Todd. Come on, let's give it up for Todd. Come on. Nobody's doing that. Nobody's expecting that. But you expect that. You expect that you're going to sit down and be able to read it all. No, it's not going to happen like that. So you have to submit yourself to it. Okay. In closing, when we have the opening range from where we open at 9:30, difference between where we settled the previous day at regular trading hours, that was this line here. Okay, let me go back to regular trading hours. There's the opening this morning at 9:30, and that's the settlement price yesterday, the close of that green candle. That's these two lines here. Okay, I'm gonna just shade it in the blue box just to highlight that, and then we'll go back to electronic trading hours. You will find that when I was teaching on opening range on indices, that when we open and we create the gap, trade up into half gap, three-quarter gap, one-quarter gap, if it breaks outside of the gap, the open, and starts to run, then you have to respect the fact that it's probably going to leave that open. And as I mentioned, I said if we go through here, then I would abandon the idea. And I said this during this live stream, by the way. If it went through here and sliced through that on a closing basis, then I would abandon this gap closure portion up here during the morning session, and it would remain heavy. And you can see that happening here. So again, I'm not trying to pat myself on the back. I'm not trying to brag because believe me, I could be doing a whole lot of things here today and brag. That's not what I'm doing. I'm trying to teach you as if you were sitting right next to me. This is how I talked to the guys and the gals that came to me in the 90s when they spent the whole week with me. I did this the first day and watched their eyes just be like, I don't know what you're telling me to do. Right. Because it's the first time we're sitting down. And then the next day, we would sit down and say, okay, now you tell me where the settlement price is, where's the opening price at today's regular trading hours, and mark up on where's it, where's the range and where's half of it, where's the three-quarter of it, where's the lower quadrant of it. And then we watch. Do you think it's going to do a full closure of that? If it doesn't do a full closure of that, where's it going to go to next? That's what I just did here. But then the next day, the third day, when they're doing it, I'm incorporating a entry mechanism, an order block, something to that effect. Okay. Selling short on a stop. So selling weakness, buying on a stop, buying strength. That was my entry mechanism for them. I was not teaching them what you're learning from me today. But directionally wise, it all stems from that same stuff. Where is it drawing to? There's your secret. That's the secret ingredient. Where is it drawing to? If you know that, you can trade retail concepts if you get the draw right. Think about what I just said there. If you know where the market's going, you can trade any old thing. Flip a quarter and put a realistic stop loss on it. Okay. And there it is. Look at it. Opening price hits it and never came back. Never came back. So, barring some crazy sell off where it just doesn't want to come back at all and it just melts today, I would expect you know, gravitating back into this eventually before um, the close of the week. That doesn't mean it gets to that level, but gravitating back to first percent to fair value gap because they're a magnet. They're like new week opening gaps. They're like new day opening gaps. And please stop emailing me asking me about what are you going to do when NASDAQ goes 24 hours trading. You're going to see new weapons. I have stuff, folks. Promise you. They have nothing that's going to thwart me. Nothing. They have nothing. Trust me, okay? I don't run out of tools. Like Bob Ross, he has a whole toolbox of paintbrushes behind him, but he's only using 3 because he can make a whole world exist from his hands with just 3 paintbrushes. You need to draw on liquidity. You need to be able to frame risk. So that means where a stop loss is. And you need an entry mechanism. There's your 3 paintbrushes. Which paintbrush are you going to use? You're all going to use the same canvas. We're all looking at the same chart, the same amount of time, the reference of where price has been, where is it likely to go. Everybody has that. It's not hiding from anyone. We all have the same information. But knowing what to do with that separates profitability and unprofitability. There's a process, there's a procedure, there's protocols you have to implement in the beginning. And then you will find what PDA array that you like best. That's easy for you to notice in price action. And when it doesn't exist in price action while you're watching price deliver, you do nothing. And you're content with doing nothing because your model did not tell you to do anything. That's the problem with my community because I have so many models, I have so many applications, so many PD arrays. You get asked hurt because you maybe used a PD array and then you made a decision to consciously change from using Silver Bullet or an order block to Breaker or Model 2022 or whatever else I come up with or whatever I've said. Okay, a Reaper, you know. Um, then you abandon that and you're looking for one specific thing that you think that you feel led to do. A new entry model, a new PD array, okay, or a trading routine that this is what I'm going to look for. But the one you stopped using delivered, and the one you waited for didn't deliver, and you missed the trade, and it runs like this. And then what are you going to do? You're going to find fault with me. I blame ICT. No, you have to be responsible. You have to take the responsibility. You want all the credit when you do it right. You want all the credit. But when you make the mistakes, you want to be able to fault my system, my concepts, my teaching, my personality. You don't see a fault with that? It's you. You're the problem. I'm not the problem. My system, my concepts are not the problem. It's you, the operator, using them incorrectly or just simply not knowing what to do. And you have to be responsible because I'm quick to respond to anybody that talks out their ass about it because I will be able to show you that you're the problem. But if you want to come at me and just talk nonsense, I'll have fun with you a little while. But if there's nothing beyond that, then I'm going to mute you. You can still watch what I'm doing, but I'm not going to listen to your bullshit. So that's it. I gave you 8 more minutes past the time I told you I would stay, and then you can go on YouTube comment section, or you can go on Twitter and tell me you didn't learn anything. It was a waste of time, and whatever. Until I talk to you next time, enjoy your Thursday. Be safe, and I'll probably talk to you again on